Have you ever imagined turning $1 billion no into one of the most anticipated IPOs in the tech world? That's exactly what Figma, the beloved design platform used by creatives around the globe, just did. In this video, we'll show you how the company flipped the script, walked away from a massive Adobe deal, and made a grand entrance on the New York Stock Exchange, exceeding all expectations. Before we dive in, don't forget to like the video and subscribe to the channel so you don't miss out on more surprising stories and big business turnarounds. Let's start from the beginning. Figma is a cloud-based collaborative design platform. If you've ever worked with graphic design, prototyping, app or web development, chances are you've heard of it. Founded in 2012 by Dylan Field, Figma changed how teams collaborate visually, leaving behind the old days of emailing files back and forth. The company quickly became a major player, especially after the remote work boom following the pandemic. But the big turning point came in 2022, when Adobe, the company behind Photoshop and Illustrator, tried to acquire Figma for $20 billion. Yes, $20 billion, but regulators in the US, Europe, and the UK blocked the deal over antitrust concerns. They worried Adobe would become too dominant in the design space. The result, the deal was canceled in 2023, and Adobe had to pay a $1 billion breakup fee to Figma instead of slowing down. That unexpected cash boost helped strengthen Figma's finances as it kept growing. CEO Dylan Field saw an even bigger opportunity, taking the company public. Then came July 31, 2025. Figma's IPO shook the market. Shares opened at $33. Above the initial price range, demand was so high, the IPO was 40 times oversubscribed, meaning investors tried to buy 40 times more shares than were available. On day one, the stock surged over 200%, hitting a high of $112, more than tripling its value in just hours. That debut pushed Figma's fully diluted market cap to over $65 billion, more than 3 times Adobe's original offer. The IPO raised $1.2 billion for the company and its shareholders. And Dylan Field, he retained control, thanks to special shares that give him 15 votes each, adding up to 74% voting power. So, what explains Figma's massive success? Well, the numbers speak for themselves. $228 million in revenue last quarter, 46% increase year over year, $44.9 million in net profit, triple the same period last year, over 13 million monthly active users, including 95% of Fortune 500 companies, and a 91% gross margin, typical of top-tier SaaS companies. Figma's blockbuster IPO has become a hot topic in the tech world and may pave the way for other tech companies like Databricks, Canva, and more to go public in 2025. It also signals a return of investor confidence in the tech sector and could mark the start of a new wave of IPO. In short, Figma turned down a giant acquisition, got paid billions anyway, went solo and nailed it. Think losing a deal is always bad. Sometimes it's just the beginning of something way bigger. Enjoyed this story? Let us know in the comments, share it with someone who loves tech, and don't forget to subscribe for more amazing business stories like this one.